get yourself a brew, man, because this market is about to get gnarly. Oh man, so Bitcoin and crypto markets are heading for a crazy March as major macroeconomic and crypto factors get closer. We're going to be breaking down what is going on in the macroeconomy because it's really starting to get annoying. And also there's a bunch of important catalysts in the crypto space, which may mean that bears will look to rejoice in this market, as we've been speaking about for a very long time here. If you take a look at the weekly chart, we were having a nice relief rally up to this 25,000 mark. And I was happy that I was in the market. I was enjoying that relief market because I would hate to be somebody sat on the sidelines from 15,500 all the way up to 25. But we know that we never reclaim this weekly EMA ribbon. Throughout this rally, I kept warning. I said, guys, the bears can come back with vengeance. And now the perfect recipe is starting to cook itself that could spell some pain here in March. First and foremost, we know that March historically is not one of the better months for Bitcoin. You can see it's normally a 3% plus month, but historically one of the weaker months for crypto. On top of that, we've got major macroeconomic news. If you look at this, which is the 5-year inflation forward expectation, you can see here it's starting to notch back up again, sitting at 2.29. This had initially dipped. It was starting to fall off a cliff, which is when markets were rallying in January on the hope that inflation was starting to come down. Of course, since then, we got bad January data. We had bad CPI, bad PPI, bad PCE, getting a lot of the markets worried that inflation is entrenched. This has now been further exacerbated by the Eurozone, which just produced their inflation figures for February. Okay, so they've already produced their February data, which we'll get the US equivalent of on the 14th of March, and inflation came in at 8.5%. Now, worryingly, their core inflation rose from 5.3 in January to 5.6 in February. Now, why is this important? The bulls in the market currently are saying, look, guys, don't worry about January. It was just a little bit of seasonal adjustment. That's why we had high inflation in the States. And by February, this will come back down and be evidence that inflation is starting to come back down. But we're starting to see here that there could be more issues. Now, of course, we know the Eurozone has had more issues with inflation, and the UK as well, compared to the US. The US has done a much better job of it bringing inflation down. But remember, we covered off yesterday the bad PMI data. We saw that manufacturing was contracting. We saw that prices paid were going up, and that spells a disaster recipe for something called stagflation. Go watch my video from yesterday to get a breakdown of that. But that's a concerning bit of February data that has already come out. Now we need to look forward to say, okay, what next then? And the next thing on the horizon, if you go to the calendar, are the non-farm payrolls on the 10th. So on the 10th of March, we're going to get the non-farm payrolls. That's going to be critically important, specifically the bit about wage growth. We need to pay attention to wage growth because that can give us clues about the potential wage price spiral, which is not good for inflation. On top of that, on the 14th, we then get our CPI reading, okay? And you can already see that markets are pricing in. Let's get a refresh of this. But markets are pricing in. Look at that. It's jumped up again. 34.3% of the market pricing in a 50 basis point rate hike. Remember that FOMC meeting comes in on the 22nd of March. Oh, I need to take a sip, guys. We've got a lot to cover off here. So, that's what the market's expecting. They're pricing in 50 basis points. I personally cannot think why the Fed would do 50 basis points. They're going to ruin any credibility that they had. They came out saying the disinflation process started. They moved down to 25 basis points. They feel like they've got it under control. They're going to do a soft landing. And then boom, they're going to go back up to 50 basis points. So my prediction is, unless we see horrific CPI reading on the 14th, I think we're still going to get 25 basis points. But that doesn't mean we can't see pain in the markets. If the markets want to price in 50 basis points, which is what they're doing right now, you will see pain in the markets. You will see risk rotate off. That will also increase the likelihood that Jerome Powell will come out and be really hawkish and give us a verbal telling off. So maybe he'll do 25 basis points, but he could give us a verbal telling off as well. So all that to say, the macro situation is really tricky right now. If you jump on over here, we can see Bitcoin's running into its EMA ribbon. Hold up. Are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. Their military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month and up to 60% off their plans. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Link is in the description. Ijaz.uk/NordVPN. And let's get back into this video. We understand that. But what is causing that? What is the problem? I want to show you this. This US 10-year yield is non-stop right now. And this is a major worry. This is completely a reflection of risk rotating off. When this was coming down here in October, November, and then a couple of red weeks here in January, Bitcoin was able to benefit. But now look what it's doing. It's gone higher than this peak. This was a lower high, right? It's a downtrend here. Now it's broken out of that and starting to create what is known as a double bottom pattern, a W pattern, which could indicate that it could start trying to head back to the previous peak of 4.3. It's already past that 4% mark, which is a major cornerstone for the US 10-year yield. When it's above 4%, markets get really nervy, and you can see that is what's happening now. I mean, over the last, since 23rd of January here, it's recorded 6 or 7 positive weeks here, powerful moves to the upside on the US 10-year. Moving alongside that, you've got the dollar index. Look at this. The dollar index has had 4 solid weeks here, moving into its weekly EMA ribbon. I've already shown you that on the daily chart, it's taken its daily EMA ribbon back. Not only has it taken it back, it's now retesting and trying to bounce from it as well. This is a problem for crypto. This is a problem for risk on assets. We have to keep an eye on this. And the only way we're going to see this stuff start to get better is if the data comes out on the 10th and on the 14th, proving to us that January was just a blip in the road and that we're back on track. So just as I expected going into 2023, a lot of bumpy ride, a lot of volatility. Imagine this aeroplane trying to land. It's like, are we going to land? Are we not? Are we going to go around? Are we going to land? It's very jittery. Investors don't like it. Markets don't like it. And it's very tough to operate in this kind of a market. It's like 1 foot in, 1 foot out. And if you're not experienced, you can get shaken out. So right now, I'm staying patient. I'm trying to be pragmatic, I'm trying not to be emotional, and I'm trying to just keep it basic, wait for pullbacks, and if we do get serious rejection here from our EMA ribbon on Bitcoin, if we do get rejected here, let me just show you what I mean. If we do lose this daily EMA ribbon, okay, I will be looking for opportunities to nibble. If we lose our weekly EMA ribbon, then of course, if they start pushing this back down to the downside, I will be looking for fun entry points. Now, that is all on the weekly chart. On the daily chart on Bitcoin, it's not doom and gloom just yet from a technical perspective. From a technical perspective, we're riding along our EMA ribbon, and it's very possible that we can bounce off this EMA ribbon and try to create a new high. But right now, the macro landscape is not marrying with that. Remember, you want to do technicals, you want to do fundamentals, and then you want to sprinkle on top the macro factors. And the macro factors right now are showing us a worrying March. But it's not just the macro economy. It's also the wider situation of crypto. Because we've got something really important coming in March, and that is the Mt. Gox creditor claims. Yep, Mt. Gox have decided that they want to start their repayments. Now, some people are coming out and saying, oh, this won't be a big issue, we'll be able to absorb it. Others are saying this is going to be a nightmare. But one thing is for sure, we need to pay attention to this, and they're going to start repaying money back to creditors from March the 10th. No surprise, it's on the same day as the non-farm payrolls. So this is going to be a crazy month, guys. So make sure you subscribe, make sure you're monitoring this with us, because we're going to give you daily updates to navigate through this. So what is this Mt. Gox issue? For those of you who aren't familiar, back in 2010, there was this big exchange, probably the biggest exchange, about 70% of the global trading volume. They had a bunch of issues. They got hacked, and basically a bunch of Bitcoin, 805,000 Bitcoins were lost. They managed to recover about 20% of that, so they've got about 140,000 Bitcoin that have been sat there with the liquidator that's about to go into the market, okay? So about 17 billion worth of claims, of which about 3.8 billion, about 20%, 3.8 billion is set to come into this market. So it's not this full 17 billion, so don't panic, it's about 3.8. Now, the average Bitcoin creditor has a claim of about 900,000, okay? They're not going to get all of that, but they've got a claim of 900,000. Remember, we're expecting about 20% payout. So if we come back down here, what I want to show you is this, because a lot of people are saying, this is going to be really scary. I want the table which gives me a little bit of peace is this. If you look at the total claims, the top 0.1% of claimants hold 27.3. In other words, they hold 5 billion of the total 8 billion in claims. Okay, so of that 3.8 that should come out, about 1 billion is just associated with these guys. Okay, if you come to the top 1%, which is about 200 odd people, 200 odd people here hold 50% of the claim. So of that 3.8, they hold about 1.9 billion each. So this is going to be critical, because if these people are early adopters and they're not willing to sell, they want to hold crypto, or they're big whales and it doesn't really make a difference to them, this can have a huge impact in not seeing a huge dump. Now, of course, for the others who aren't whales, this could be a huge opportunity for them to sell. Right? They will be likely to sell. I mean, if you run into a claim where you're going to get hundreds of thousands and you've been waiting for years and it could change your life, maybe you could buy a house, you could buy a car, you can make your life better, then of course you're going to look to sell. But the other thing we have to be very cognizant of is not all of this is expected to come out on day one. So the payments start on March the 10th, but there's a deadline to complete them around September the 30th. So that gives us a good period of 6 or so months for these claims to start dissipating into the market. Now, I've covered up videos on this before. Look, there will be some sell pressure. It won't be a normal day when these start to happen. There will be some selling pressure, but I don't think it's going to be anything that the Bitcoin community cannot handle, and the volume will be something crazy. I think we'll absorb it and we'll be okay. I think the bigger narrative is what I spent the first half of this video talking about, which is the macro data. On that day, I think the non-farm payrolls are going to have a bigger impact than Mt. Gox. Of course, this can be spread out over 6 months, and I think we'll see the impact over those 6 months. But it's not just that. What else do we have? We also have Ethereum Shanghai upgrade expected in March as well. Again, there's no exact date for this. It's expected in March. I've done a separate video breaking down exactly what to expect and how to plan for this. But again, it's going to create some selling pressure. There will be people who want to finally, after 2 years, unstake their Ethereum, sell and move on to something else, or take profits and spend their money, right? So we've got to understand that there's a bunch of different stuff going on here in the market, and it could rattle the markets from here. Also, CPI on the 14th, and then the FOMC meeting on the 22nd of March. Boy. Guys, how are you feeling about that? This March is going to be one hell of a month for crypto. But the reality is we need to zoom out and say, you know what? What's the worst that can happen from here? Are we going to get rejected from here? Are we going to fall down to 22,000, maybe even lower? And be prepared for buying the dip. I personally know that if we fall here anywhere below this level here at 22, I will start nibbling. If we fall below 20, I will be buying in even bigger chunks, because for me, these are beautiful opportunities. Things like Mt. Gox, things like the Shanghai upgrade, those are fundamentally positive things. If there's a hack on an exchange and people are getting their money back, that's positive for crypto. If Ethereum is going to allow you to unstake Ethereum finally, fantastic. Now, where the jitters start is if inflation shows its head and says, we are not going. That is what's going to shake this market. That is what will then send traditional markets and Bitcoin for a bigger retracement, which is where we look to start getting rejected from this weekly EMA ribbon. Because if the dollar index decides to go on another run, guys, just like we've seen it do before, remember this dollar index peaked out at 114. If this wants to go revisit those levels, that could spell a period of pain for crypto. Guys, I'm not going to sit here and say Bitcoin to 100,000 nor Bitcoin to 10,000. It's not about sensationalism, but data has started to come out showing that there are concerns with the macroeconomy. There is a tricky landscape here for crypto throughout March. Let me know, how are you looking to navigate through this period? Let me know in the comments. Are you buying? Are you looking to DCL? Are you selling and getting out of this market, looking for another time to enter? Don't forget to go watch the Ethereum video here so you get to know everything that you need to know going into that Shanghai upgrade. And I'll see you in the next one.